Ladies and gentlemen, welcome to Triple N Media. I am NIK NIKAM. This is a stock market update, March 17, 2021. The long awaited FOMC meeting came and it's gone. We heard Jerome Powell, and it looks like the market is treating the Jerome Powell's interpretation of the interest rate, the inflation, and employment as a possible green signal for the next few weeks. Here is a quick summary of what Jerome Powell, the Fed chairman, said. They are going to keep the Fed funds rate at 0 to 0.25%. Inflation around 2%. It may creep up a little bit, close to 2.4% temporarily. There's been improvement in the job market. He talked about 370,000 new jobs added, and he said the unemployment had come down from 6.4 to 6.2, and he expects the unemployment to be down to 4.5 before the end of the year. They would like to keep things the same way until the job market fully recovers. The market seemed to be happy with the green signal, even though we had the 10-year Treasury rate jumping up to 1.67% in the morning, which pushed NASDAQ and S&P down several points. But at the end of the day, everything turned out to be green. That's a quick overview, and let's see how the market interpreted that and what to expect in the coming days. Here is a diamond, which is a proxy for Dow Jones. As you can see, it had a nice run up after that downs on the March 5th, and it had a nice run up, and here it dropped a little bit, about up to 327, and recovered most of it to close at 189.42 points higher today. This is a new high for the Dow, but looking at the waveform, it looks like it made a five-wave progression, and we have A, B, and if I can use a little pencil here, we may be in for a C correction before the market tries to make another move to the upside. So that is as far as the Dow is concerned. Let us see what I can see. What's the next one I have here? Okay, here's the SPX or SPY, and we have a similar situation here. We had a very good impulsive wave which came all the way up to here, and then we have, unless this is the end of the wave here, and this was A, B, C, and now it's going to make a new wave going up. Nonetheless, they are making higher highs. That's a good sign, and that's where we stand as far as S&P 500 is concerned. And as you can see, the SPX made a high of 3983.87. It just fell short of 4,000 landmark, but nonetheless, I think it made a high and it pulled back a little bit and to close at 3974.12. But things look kind of promising here. From what we can see, we have to see in the next couple of days whether it would be able to sustain the rally and make progress in the coming days and weeks. That is as far as SPX is concerned. Now let's look at the NASDAQ. NASDAQ, which has been beaten up pretty badly in the previous 3 weeks in February, made a nice recovery here. We were really concerned about whether the NASDAQ was going to take a beating and try to retest this low of 297, which reached on March 5th. But luckily, I think the green signal from the FOMC meeting, as the market wants to interpret it, they were able to hold off. But as I said, the NASDAQ opened almost 38% down from the bottom here. If you put the Fibonacci numbers, I'm not going to put it now, but it was down to close to 38% correction. So I'm assuming that we are probably going to see a zigzag correction or like a flat correction here, before it begins to recover most of the points it lost during the 2 weeks in February. So that is as far as Nasdaq QQQ is concerned. It has created a nice trend line here on the bottom, and we have a decent trend line at the top. Now this has to be followed as a resistance level and see what happens in the coming days. So this is a quick overview of the stock market and the effect of FOMC, which the market seems to interpret it as a possible cautious green signal. Dropping, Dow dropping 500 points or Nasdaq dropping like. See you next time. Thank you so much.